Today we explore what is a dividend and when do companies pay them. Dividends might seem like numbers on a stock sheet, but they're real cash flowing to you from companies you invest in. Think how many of your investments are actually earning you money without you selling anything. Notice the quote here: dividends turn company profits into personal income. Warren Buffett. That's your first clue. Profit becomes tangible wealth. And yes, you can grab the PDF handout from the link in the description to follow along. Slide 2, Agenda. Here's the journey we'll take. First, we'll understand what dividends are and why they matter. Then, we'll break down timing, yield, and reinvestment strategies. Finally, we'll cover actionable takeaways and reflection points. As we move, notice how each slide builds on the previous. This is a connected story, not isolated facts. Does the roadmap spark ideas about how your own investments could flow? Slide 3, Introduction. Why dividends matter. Dividends are simply a portion of a company's profits paid to shareholders. This means you can earn income without selling your stock. Think about that. Your investment is working even when you sleep. For example, Coca-Cola has paid dividends consistently for over 50 years, rewarding patient investors. The practical insight: dividends aren't abstract, they are signals of stability and trust. Keep that in mind as we dive deeper. Slide 4, Lesson 1, Dividend Basics. The first point: dividends can be cash, stock, or even property in rare cases. Unlike capital gains, which require selling, dividends give ongoing income. Building on the introduction, this bullet shows how dividends anchor steady financial growth. Real-world anchor: Coca-Cola's decades-long consistency. Your angle: are your investments producing recurring income, or are you waiting for growth alone? Remember Buffett's wisdom: do not save what is left after spending, spend what is left after saving. Slide 5, Lesson 2, Timing Matters. Here we get tactical. Dividends follow dates: declaration, ex-dividend, record, and payment. Missing the ex-dividend date, you get nothing. That's a common mistake. Example: Apple resumed dividends in 2012, signaling confidence. Your takeaway: track these dates, plan reinvestment, and never let timing slip. See how this links back to slide 3. Timing turns the concept of dividends into actual cash flow. Slide 6, Lesson 3, Why companies pay dividends. Why do companies pay? 3 reasons: reward shareholders, signal stability, and manage excess cash. Think about Johnson & Johnson. Steady dividends appeal to conservative investors. The lesson: dividends reflect both company health and reciprocal responsibility. Ask yourself, are you evaluating why a company pays or just chasing high yield blindly? This insight connects to the agenda item on sustainable income. Slide 7, Lesson 4, Dividend Yield. Dividend yield equals annual dividends wire stock price. High yield is tempting, but it can indicate risk. Low yield might signal growth potential. Take AT&T as an example: high yield, declining earnings. Your question: are you looking at yield alone or its sustainability? This links to slide 6's rationale. Yield is only meaningful when backed by strong company fundamentals. Slide 8, Lesson 5, Reinvestment Strategies. Reinvesting dividends compounds wealth. DRIPs automatically buy more stock, growing your holdings. Vanguard's DRIP program is a practical example. So that small dividend payment, it snowballs into meaningful growth over time. Ask yourself, are you letting your dividends sit idle, or are you harnessing compounding? This builds directly from previous slides. Timing and yield become more powerful when reinvested. Slide 9, Actionable Takeaways. Here's your checklist. Track dividend stocks, mark ex-dividend dates, evaluate yield sustainability, diversify growth versus income, and reinvest via DRIPs. Think weekly tracking: simple, measurable, actionable. Small, consistent actions compound into financial resilience. See how each takeaway mirrors lessons from prior slides? That's intentional. Each point reinforces the narrative arc. Slide 10, Personal Reflection. Take a moment. How do dividends fit your long-term goals? Are you balancing yield with growth potential? Imagine integrating dividends into your portfolio. Your mindset shifts from chasing price moves to building a disciplined income stream. Remember, dividends cultivate patience and strategic thinking, not instant gratification. Reflect, what bold step can you take today to implement this? Slide 11, Conclusion. To wrap up, dividends are tangible income and indicators of stability. Reinvest wisely, track actively, and reflect consistently. Apply just one strategy from today, start tracking an ex-dividend date, or enroll in a DRIP. Small wins compound. Don't forget to grab the PDF for a structured action guide from the intro and final slides. Inspirational nod. Apply one strategy today. Small wins compound into financial resilience. Slide 12, References and Disclosure. Quick references. The Intelligent Investor, One Up on Wall Street, Dividends Don't Lie, The Snowball. Companies we mentioned: Coca-Cola, Apple, Johnson & Johnson, Vanguard DRIP. Note, affiliate links may apply, full transparency. And hey, if you found value, subscribe to the channel to keep learning actionable investing insights every week.